Hey, what's up, everyone, and welcome to Tuck Notes, Beginner Stock Talk. My name's Tuck, and tonight we're be talking about Tesla stock. Coming up, we're going to talk about what to expect moving forward for the next few days, weeks, and towards the end of the year. We're going to go over why Cathie Woods is kind of shocked and surprised about her ETF funds being down, and why she's doubling down on her high conviction stocks and like Tesla, Roku, and Shopify, and there's some others too. But for right now, Tesla's sitting at $1,017.13. It's been up 1.59%, which is $15.90. Like the past 5 days, and there was a slight red day where it was a sell-off, and that was Elon Musk selling about $900 million worth of shares, which made the high go from 1070 to 986. And so I remember I saw that, I thought about buying, but I stuck to my plan. And so far he's sold 65% of his shares, and he has 35% remaining. So potentially he could be done selling all of his shares by the end of the year, which would be great. And if it does happen, then we could start seeing a nice push on Tesla stock going to the up position. But we still need the confirmation, that, by seeing the red flags every day or a couple of days, I don't know how he's going to do it, but that he's done it, and also by paper that he's actually sold the stocks, and it's not some random person. So there's 2 to 3 weeks left in the month. I don't know what's going to happen. The remaining, we don't know what's going to happen by the end of 2021. There could be a potential Santa Claus rally, but for now, we have to be watching out for Tesla moving slowly, trending higher to maintain this $1,000 benchmark, or price mark, at least, not benchmark. But it's acting as a strong support for us, and to be on the lookout. And later we'll go into the technical analysis of Tesla after watching the video. But now we're going to talk about Cathie Woods and her stocks and why she's surprised, and actually why they're underperforming compared to the rest of the stock market. And Cathie Woods is well known for predicting massive moves of Tesla. And I've heard this from so many YouTubers and knowledgeable people. And she still anticipates a massive move for Tesla to the upside. But there's massive moves going over that. She still believes in Tesla stock going up. There's just I don't know what's going on right now, but she still has her high conviction that Tesla will reach $3,000, eventually. I don't know when, but hopefully sooner than later, and not have something stop it in the middle. But right now I'm going to show you, and why she's, the video she'll go into why she's shocked, why she created the transparency ETF, and, after that we'll go over what to expect in the short-term price target for Tesla stock. So with that, we're going to start the video.
One thing that I think people are looking at this year, they've had a lot of struggles. Some of the stocks are down big. At what point do you rethink your thesis for some of these stocks? We see you buying into some of the pain, but for not every call works out. So some of your investors, I think, want to know, is there a time you throw in the towel? Do you have an example of that, or are you looking to do that with any stocks you currently hold?
Yes, what you see us doing, especially during periods where our style is out of favor, which is very unusual in a bull market, by the way, highly unusual, and we can get into that in a moment. But what we usually do is consolidate our holdings towards our highest conviction names. And a lot of commentators noted earlier in the year, during the February through May washout in the innovation space, that we sold our Chinese stocks. Now, in the flagship fund, we moved completely out because we are consolidating or concentrating our portfolio towards our highest conviction names. Now, that turned out to be a very good move. And we've seen that concentration work many times where we've lost some conviction. We still like a stock, would normally sell it, but we like these other stocks better. We have much more conviction in these other names. And those are the names in our top 10. So the Tesla, the Roku, Teladoc, Square, Shopify, and so forth. So that's when we make a lot of those moves. Of course, you saw us sell Zillow recently. It was a little bit of the same. Our style, it has been under pressure. Zillow does something most unexpected, changes the strategy that we thought they had been working towards for 10 years with Rich Barton, the founder of the company, coming back around to execute on this Zillow offers. And then they pulled out. They realized they didn't have the right DNA for it. And so we might have known that ourselves, I suppose, but it involved artificial intelligence. We thought Rich Barton was right there, was on top of it. So we did sell on fundamentals, that particular name.
Talk to me when you talk about investing in some of your highest conviction names. It does create concentration risk, not only with a single stock as much as 8-9% in a single ETF, but that name repeats itself in many and several different ETFs. How are you thinking about concentration risk when things do move to the downside?
Yes, what we are usually doing in a bull market, and you saw us do this last year, is as a bull market extends, we actually diversify our portfolio more and more, putting in names like the FANGs, which we consider more cash-like instruments in our world. We're much more focused on the innovators of the future. So you will see us do that, and that's what we use to concentrate our portfolios during downturns. Now, why do we think it's such a good idea to concentrate during downturns? Because most...
Okay, now we will watch part 2 in the second video. Okay.